Hey, and welcome back. And today we're going to talk a little bit about why we use real estate as our wealth creation mechanism. Before we get started, investing is always at your own risk, and real estate should just be part of your portfolio. If you want to know more, it's always important to talk to a financial advisor. So let's dig in and go into why we chose real estate and the aspects that we like about real estate. So the first thing here is that it's a physical asset with a strong track record. So real estate, we know the formula, we know the structure, we know what a house looks like, and we know the models, and we know what has worked in the past, and we can look at the success of real estate trust, of real estate investing. This is not something new. So this is the first thing we like, that it's a physical asset, unlike a stock market or a startup where there's a huge variance and a large amount of risk involved in those because there's so many unknowns in the process. The other thing that we like about real estate is it's consistent underwriting. So this is about evaluating the risk and return of the investment. So having that consistent underwriting, understanding things like loan to value ratios or location, is it in a city area or an urban area, the type of home that it's going to be or type of property it's going to be. All these things go into consistent underwriting models, which are often used in giving out loans and funds. So understanding the evaluation of a property is fairly consistent, and it has been modeled 1,000 times. So we like it because property can be evaluated on fairly known and consistent metrics. Distributing your risk is another one. Given that this is we're focusing on on crowdfunding, you're able to distribute your funds. You're not always investing in a single property, um, which would allow you by law of averages, give you a good estimate of what your risk is and your return for the properties. The other thing that we really focus on is the properties and how they're structured. So most of the properties have the following. They have a development period. So when you invest into them, there's a period of development. This can be up to a year, it could be longer, and it's the initial stage. The next stage is when they start leasing, renting, and there's a cash-on-cash component, which means you start getting payouts, which are monthly or quarterly, depending on the property, but it gives you that secondary revenue return during that time for reinvestment or for cashing out. And then after a period of time, normally about 5 years, you're going to get a sales amount. And this sales amount will give you another boost of funds. So you're going to get the rest of your interest and invested principal back during that sales period. And that's generally selling the whole building to get like that revenue. So this is generally a 5-year process, but as is mentioned, it varies from property to property. These attributes vary, whether the payouts are smaller and the sales value is higher, and the mix and match. But the attributes give it a nice characteristics and give it good characteristic for building wealth, giving you something during that time, giving you some type of return, and then giving you a larger return after a period of time. So this is why we chose real estate, and we can compare this with crowdfunding for startups, which are heavily risky, which also can be a good investment, but it's about managing that portfolio. The other one, compared to stock market, a lot of variance, a lot of attention, and a lot of study. And it's very hard to underwrite specific stock market because every stock will have a very different specialty, and each specialty needs its own underwriting. So these are some of the attributes that we looked at when choosing what asset class we're going to use for the crowdfunding. Real estate, I always recommend go to any popular website about real estate, read the background, understand it, be comfortable with it. And the other thing we liked about real estate is over 55% of millennials were interested in investing in real estate, owning their own property, renting it out, whatever aspects it was, but just didn't have the revenue to do it. So here we liked real estate because it's a trusted platform and a known structure, but not requiring that very heavy upfront capital, taking a little bit from many rather than putting a large capital risk in one go. So that is some attributes of real estate and why we like real estate, and especially seeing how real estate is growing in the US markets. All right, so hopefully that gives you a good understanding why we chose real estate, and that real estate being part of your portfolio is a good choice to make. And I look forward to seeing you in our next video.